Hi there, traders. Hope you guys are well today. So, guys, I dropped a video yesterday on market maker psychology and how retail traders are trading, and I just want to show you that the exact same setup, exact same thing that I was talking about yesterday has happened today. Okay, so I've had a few emails from people asking me to basically they want to further understand this strategy and how it works. Okay, you can see how the market's now pushing above these highs, right? So from start to finish, I just want to go over what I do coming into the market every day and how I plan my trade, right? What I'm looking for. So I want to come into the market. You can see this is Friday, so today is Monday. I only want to really trade the session, start looking for trades from the London session. Okay, so what's happened here is I'll come to the market and I want to see retail traders. I want to see a peak formation that's been put in the market, right? So I want to see a peak formation. Okay, so I want to see a high that's been put in place or a low. You can see a high was put in place. Right, now what I'm looking for is that what do I understand? I understand that retail traders have gone short. Okay. The retail traders are in the money. All right. Market makers have let retail traders basically come into the money. Retail traders would have taken a entry based on this order block over here. But what I'm talking about here is so what you want to see is retail traders either coming short from a peak formation from the top or from a peak formation from the bottom, right? So I want to see who's in profit. So I can see here these guys are in profit, right? So now I want to drop down to the 1 minute time frame. And I want to wait for the price to drop down to structure. And bring up a line chart. So as price is dropping, I'm starting to look for areas where price may reject. I'm looking for areas where the market makers might turn price in order to come back up for retail stops. The simple thing you can do here is just put a line going across. Okay, or you could mark it as a zone. Okay, well, let's go to candlesticks now. We can just basically mark this off as a zone, right? And when price comes and touches, the price starts reacting to this formation down here. That's when I want to start looking. I want to zoom in now, and I want price to mess around in this zone and prove to me that it's broken structure. We can see that price has been in a downtrend. Now I want price to prove to me that it's going to go up. And you can see how they've gone up for the liquidity and they've stop hunted these guys already, right? Now if you look at this, just this move alone, if you got in over here, now you would have caught your 40 to 50 pips for the day and you would have closed. And you would have been risking about 10 to 15 pips. Now, how would you enter this? As I said to you, I'm looking for a structure break. As we can see, a price puts in a lower low, lower high, lower low. Okay, then price puts in a lower high. Price pushes back, pulls back. Now all of a sudden, you can see over here, price break structure. You can see based on this move that price has broken structure. Okay, the first mouse have gone up, they've pulled back, they've stopped out the first mouse at break even. Okay, now they pull back, they put in a lower high. So from this point on here, that's where I'm looking for candlestick patterns. And I mean, it's still rejecting the zone that I marked out, right? So what I'm looking for is tweezer bottoms, bullish engulfing candles, those sort of things, right? So I see a bullish engulfing candle right over here. Basically engulfs all of this, and it takes out this high that they've put in here, right? The high that broke structure. Then I'm waiting for a pullback, and I'm looking for rejection, right? I wanna get in at a discount. So I would be entering here. I would most likely be entering there. Okay, so I'd be entering here. having my stop. You see my stop is about 12. See my stop is about 13 pips, 12 to 13 pips. And what I'm looking for is to target the liquidity. I'm at least want to target these highs, right? Going back up. So you can see that's a 1 to 2. Okay, if we want to refine our stop even more, we can put it here as a 9 pip stop, and we can just put it below this structure, because if price is going to come and break the structure, I really don't want to be out of it. I don't want to be in the trade, but we can risk 1% and put our stop just below there, right? I'm happy with a 1 to 1.5 or 1 to 2. So once price takes out break-even, traders, once it reaches that structure, you've basically caught a 1 to 2.5. What you can do is 1 to 2. What you can do is close out 80% and leave 20% to run. You can see that. So you want to be following the market context. So you can see that this price, the market here is bullish. So you want to see these fake out moves to the downside and get back onto the bullish trend going up. So stay on that bullish bias trend, because we all know that as the market's pushing up, retail traders are all trying to go short. So that's another tip. Okay, sweet guys. Hope you found some value in this video. I'm going off to bed now. It's really late. Peace guys. Have a good week ahead. May the markets go with you.